Gold has been fading since its August high, a drop that preceded the one in the NASDAQ, but now the two continue to move together as risk assets. Will Rhind is the founder and CEO at Granite Shares. So, Will, I want to first kind of get your thoughts on how to characterize gold. Should it be a risk asset? Because that's usually what we call stocks, and it's trading almost exactly like one right now with the NASDAQ.
It certainly feels like it over the last couple of days. But to put this in a broader context, Oliver, I mean, remember that after the last financial crisis of 2008, it took gold 3 years to get to an all-time high. We did that this year in the space of just a few months. So the gold price has gone up a lot, since the crash in March. And so a consolidation at this stage, or indeed a pullback, was probably overdue. However, I think we need to take a step back and look at the broader economy and think about, gold's role at this particular time in a world of zero interest rates and anemic growth. And I think that's where gold still has a lot of room to play in the portfolio.
What about how those two factors are changing? Because it does seem, to your point here, that the speed of that climb in gold to the record definitely had a lot to do with interest rates, with a major growth scare. And gold is moving, obviously pre-COVID, it was moving quite quickly as the Fed was reversing interest rates, cutting despite an economy that was all right. But what's new from those two areas? The Fed seems like they're good. They don't want to go negative. A lot of gold bugs here over the last couple of years told me negative rates would be a sure thing by now, Will.
Yeah, I mean, certainly in the terms of the Fed fund futures is predicted negative rates in the States. But as you rightly pointed out, the Fed have said publicly that that's not something that's on their cards. But who knows what's going to happen? I mean, we see negative rates being a pervasive policy in a lot of the European countries, other parts of the world. And so at the end of the day, the Federal Reserve, I think, are going to do what they need to do, or do whatever it takes in order to support the economy and try and drive inflation, which, as viewers will know, is the latest sort of iteration in terms of policy, and try and get the inflation rate higher. And from that perspective, I think that is pro-gold. Okay.
So, Will, what then should we be looking for? What's the catalyst from here? You mentioned the Fed. I mean, we still have these low rates that don't seem to be going anywhere, but there's nothing new incrementally. So as far as a catalyst, then, is the more obvious catalyst going to be further weakness in the economy? Are people going to pile into gold if things get really bad? Because actually in March, as things got really bad, they bailed out of gold. They went into the dollar.
Well, no, that's not strictly true. I mean, the dollar obviously went up, but I mean, gold flows, I mean, this has been a record year for gold inflows into ETFs. Gold ETF inflows were massive in the month of March and April of this year. And of course, gold prices dipped a little bit immediately, but it was nothing like what we saw in 2008, where from peak to trough, the gold price actually fell 30% in 2008, although it ended up positive, obviously, for the year. But this year, gold price was just overwhelmed by demand, Oliver. And we see gold ETFs now at all-time highs in terms of holdings. So people have bought the gold market pretty consistently throughout this time. And I think, look at the catalysts going forward. The reason why the market has been a bit more volatile is because volatility itself has picked up. The market is skewed very much in terms of some of these large tech mega cap names, which just make up such a large percentage of the market and dominate the performance. And so there's going to be a pickup in volatility if those names start to move around a little bit, as they've done. Second thing is we've got a election coming up in November. And although obviously we don't know what's going to happen if Joe Biden was to be elected president, I think the consensus would be that that would lead to more government spending, would be probably pro-gold in terms of fiscal policy.
Okay.
So I think that would be a positive for the market. But I think short term is the dollar.
Two-pronged question here for you, Will. Since August, so basically 2 months now, over the last 2 months, would you describe the election picture as becoming more or less stable? And would you describe the economy as becoming more or less stable over those last 2 months?
Well, the economy is definitely not stable because obviously we've got a second wave kind of breaking out in Europe. We've got the UK, my home country, going into a lockdown again, not a full lockdown, but a sort of partially full lockdown, if that's even possible.
So it's gotten less stable.
Certainly, Yeah, exactly. Less stable.
Okay.
I think here, I don't think we're going to see another lockdown before the election. But obviously, again, who knows what happens if a new administration is elected? That the public health policy could change. Certainly, coming into flu season or traditional flu season towards the end of the year. Certainly, in the northern parts of the countries where I am here in New York,
sure,
one could expect potentially another spike in terms of cases.
Sure. And what do you think about the election in terms of over the last 2 months? Again, does it look like the election is getting like more and more a binary event, or is it looking like it could get more and more complicated?
I think it's not decided in any way. I think from the market perspective, of course, it's a market moving event, as it always will be. But I think the good news from a gold perspective is I think both administrations are pro-stimulus, and indeed the median voter is pro-stimulus. In other words, I think whatever the outcome is, I think one thing that we can be, rest assured is that the Fed, central banks, will continue to be accommodative. And from that perspective, that is pro-gold.
Okay, so here's where I'm having a little trouble with the logic, though, Will, because it doesn't sound like you think the economy's getting better over the last couple months, or that the political outcome is getting any less positive for gold over the last couple months. But gold's down 10%. Looks like we're establishing a new trend of lower highs, lower lows. We just broke through a 2-month-long support. So if these things, as you say, are positive for gold, how come gold's going down as the narrative for those things is going up? How does that make sense?
Gold goes down and up on a daily basis, just like anything else.
I know, but it's down 10% over the last 2 months as the two catalysts that you're saying should be positive for gold have gotten more compelling, I would think. Like the election looks like it might be a mess. Economy, as you point out, flare-ups and COVID are getting pretty bad across the world, but people are running away from gold.
I don't think people are running away because the holdings in terms of gold ETFs are higher, but there will be short-term factors like a stronger dollar that will mean a weaker gold price in the short term. But I think, again, to me, this is all a longer-term picture in terms of the environment for gold. It's not about the day-to-day picture. These things will move gold prices, move on a dime, depending on what day of the week it is. But we're focused on the longer term.
Okay, so you're not concerned with the break of the 19, thinking of the longer term, watching the ETF flows. Appreciate the thoughts, Will. Thanks for walking us through the case here for gold. Appreciate it. Will Rhind, founder and CEO. Thank you at Granite Shares.